For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Hello, everyone. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. Today, our webinar's title is The Secrets Behind Corporate Action. So welcome everyone to this session. My name is Shane Chu. I'm the moderator for this session. All right, now in the corporate world, there are bound to be various forms of corporate actions that sometimes can confuse us. Some different corporate actions serve different purposes. Some are used for fundraising, some are used to improve liquidity and so on. So these are some corporate action could be very complex. So it is important and essential for investors like us to be able to identify and discern which corporate action will be beneficial to the shareholders and which one is not, and which one should we subscribe and which one should we not. All right, so today we are going to talk about and discuss a little bit about the secrets behind all these different corporate actions. So disclaimer, whatever we share on this webinar is only for educational purpose. So in no way that will give you any recommendation for you to buy or sell any listed company security should we mention here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. All right, so let me introduce our speaker for today. And he is none other than Mr. Vincent Poo. Now, Vincent graduated with a bachelor degree in finance and investment. He is an associate member of Certified Financial Planner, CFP. He's also a Securities Commission licensed financial planner. He specialized on personal financial and risk management planning. And currently, he is helping more than 350 clients on managing their wealth with more than 10 million AUA in wealth management field. So he is our guest from Bull Bear Bursa, right? So welcome, Vincent. Thanks for having you here in our session.
Okay. Good evening, Shane. Good evening, everyone.
Yes.
Yeah, Shane, can you hear me?
Yes, perfect.
Okay, great. So thank you, Shane, for the introduction, and then thanks to Bursa Malaysia for inviting me to today's webinar. It's my pleasure tonight to share to every one of you on today's topic, the secrets behind corporate action. Okay, so hold on, let me share my screen first. Okay.
Perfect. Can see.
Okay, sure, no problem. Okay, so yep. So once again, thank you, Bursa, for the opportunity to invite me to share for today's topic, secrets behind corporate action. And since Shane already do the introduction, I just do a brief one. My name is Vincent. Currently is an independent advisor in wealth management industry. So I provide my client advice on investment, insurance, and also estate planning, mainly on their financial planning. Okay, so during my time when I speak to my clients, I got a lot of questions from them regarding corporate actions. Okay, some of them are unsure how to calculate the shares unit or share price after certain corporate exercise, and then some of them don't understand the purpose of certain company. What is the reason they do their corporate? I mean, they do this kind of corporate action and so on. Okay, some even say that all those corporate action are used by major shareholders to con small shareholders like us. Okay, it's a scam and contains conspiracy theory. So okay, to understand what is the purpose of corporate actions done by company, we have to understand what can this corporate what can this corporation helps the company? Okay, this action helps the company, and how will it impact the stakeholders? So the stakeholders can be the board of directors, the stakeholders can be the employees, the stakeholders can be the shareholders. Okay, so it can cause impacts towards different person, and then maybe even towards the share price or maybe the company employees, etc. So today we will be talking about. For today's session, we'll be looking forward to understand a few things. Okay, so first of all, what are corporate actions? Okay, and then what does it mean about corporate actions? Okay, and next we will be looking at the purpose of different corporate actions. So for example, like what is the reason certain company did this, and then what is the reason that certain company did that? What is the reason behind? What are they planning to do, or something like that? So is it to help company to have an easy planning in terms of their corporate structure, or maybe to attract more investor, or we can say maybe to raise fund for certain projects or certain development. So different corporate action have the different reason behind. So today we are going to find out what is the purpose of these corporate actions. And then because when we understand how a companies operate, we will be able to understand what is the purpose of different actions from different companies. Okay. Of course, last but not least, we'll be looking at different types of corporate actions from the companies and what is the impact towards different stakeholders, as I mentioned just now, because it can be good to a certain party, it can be not so benefit to a certain party. So we need to understand this, and then we will able to know that we as an investor, what can we do? And then how should we react on this? Okay. So here are the few corporate actions that we are going to go through later. We will talk about them one by one later. Okay. So the first thing, what are corporate actions? Okay. So first of all, what are corporate actions? And then in terms of, if you look at the explanation, okay, corporate actions means that it is initiated by the issuer of securities, which means the companies, and it may impact the stakeholders. As I mentioned just now, stakeholders can be board of directors, can be shareholders, even can be their employees. Okay, so it may impact positive or negatively. Okay, and then there is an immediate impact on the share price. If let's say certain actions will impact the share price, okay, company share price, whenever the company is planning to come up with corporate action as well. So in short, corporate actions are done by companies for their structural changes. Okay, so in order to make things easier for the company to operate and also to manage, okay, because maybe I do a quick, how should I say, a quick survey here. Okay, how many of the attendees here is, have their own business, which means they have their own company, is either self-employed or maybe, how should I say, or maybe they start up in entrepreneurship or maybe a Sdn Bhd. Just a quick survey. Hold on, I can't see the chat. Give me a moment. Okay, Zulkifli, say none of the above. Okay, anyone? Retired, wow. Okay, partnership. So partnership is one of the, you're operating one of your own business as well. Okay, so I think for those who are running a company, regardless of entrepreneur or maybe partnership or maybe a Sdn Bhd, you will be understand that to manage a company is not easy, okay? Especially managing a listed company, which everyone will pay attention, okay? Because those are listed in public, okay? And then it's public listed company. And then whatever action they do, whatever movement they do, everyone will be able to see because it's transparent to everyone, okay? So the company management will need to have certain actions to simplify the management process, so they can be more efficient on their management to make the company move in a better direction. Okay, so before we understand what is the impact of certain corporate actions, we need to know what is the purpose of the related corporate actions. Okay, there are a few reasons which companies propose corporate actions. Okay, the first reason can be is most important for one of the most important reasons for company restructuring, okay, because as a listed company, the company size are very big, okay. It can be the market cap, it can be 10,000, 10 million, a few 10 millions and then a few 100 millions, or even towards billions, okay. The company size, the market cap of the company is very big, okay. And the whole company structure have a lot of level, which it will be very hard to manage, okay. So in that case, sometimes company will need to have a certain kind of restructuring on their business in order to make a better and easier decision. Okay, so by making more efficient decision in the company, towards on a business, okay, the company management can increase the company's profitability in the near future. So this is the main purpose of company restructuring. They want to ease off the management process and to make things more efficient, okay, so that they can generate more profit in the future. Okay, so the example for corporate restructuring will be spin-offs and M&A. Okay, M&A, mergers and acquisition. And the example for this is the two example for corporate restructuring, especially in big companies. It happens actually quite frequent. Okay, so what are the examples do we have right here on corporate restructuring? So the one of the most famous M&A actions around this time is in the market is Digi and Celcom merger. Okay, so maybe I just get some case study for you all to understand more about what is the corporate action, what is the restructuring about, and then you can have a better picture on how does it work, and then also how it's going to happen. It's actually happen in just near around us. Okay, so let me have a look. How many of the attendees here is using Digi or Celcom? Maybe if let's say you just give a me here, okay, just type a me or one. Yeah, Digi. I saw a lot of Digi or Celcom. Okay, so this happens just around us because definitely some will say, is the merger, I don't own Digi and Celcom shares. So is the merger, is the acquisition related to me? Okay, yes. Even though you are not Digi or Celcom users, for example, if let's say you are Maxis users, but Digi and Celcom will be Maxis competitors. Okay, so definitely it will be affect in some way. It can be directly or indirectly. Okay, so we talk about Digi and Celcom merger, and this merger news has been in the market for a very long time. Okay, since May 2019. So back to May 2019, both companies announced to Bursa that they enter into a discussion to merge and operate together. Okay, but they can't reach to an agreement internally regarding the terms and conditions because this is two big companies. When they want to merge and operate together, there is a lot of in terms of operation or maybe the company direction, they need to discuss internally to have a clear path. In future, what are they doing, and then what will they doing, and how it is affects, and then how should the operation run. Okay, is it a certain department need to have some restructuring or something like that? So they couldn't reach an agreement internally back in 2019. Okay, so that time the merger case keep delaying. Okay, but however, the discussion between Digi and Celcom never stopped here. They resumed their discussion on year 2021. Okay, so which is last year, and start to initiate the merger on July 2021. Okay, so during this year, both companies have been go through a lot of discussion and try to work it out on the merger. Okay, and as of today, actually just today morning, okay, it's fresh news. Okay, both companies received a notice of no objection from MCMC. Okay, so they can actually now proceed with the proposed merger to their telco operations. Okay, so both companies now are looking forward to realize the potential of proposed merger company. Okay, so as I mentioned just now, if let's say you are not DG, okay, if let's say you are DG and Celcom shareholders, okay, definitely it will be affecting you, okay, because just imagine like, I mean, you are working in a company. Take as, okay, not to say working, you are investing in a business, okay? So this business want to merge together with their, before that is their competitor, okay? So definitely it will be huge changes on a lot of things, okay? So if you are shareholders, you will be affected. Even though, as I mentioned just now, even though you are not direct shareholders, you might be affected indirectly. Okay, so what we need to see is that what is the purpose of DG and Celcom merged together? They have been discussed for so long, because as we know, actually telco industry is entering red market. Okay, so basically it's the demand is stagnant. Okay, the demand is stagnant, but the supply it's always there. Okay, so in that case, if let's say they don't do something, the only way to win their competitors is price war, because of course they can come out with attractive package, or maybe to improve their quality of network or something like that. But anyhow, their competitors can do that also. Okay, so basically it is not to say like one of the company have a certain very strong advantages which other company cannot match, because other telco companies can do the same as well. Okay, so for the merger of DG and Celcom, both company actually wanted to accumulate a stronger capacity to drive digitalization in society broadly. So no matter for consumers, for businesses, the partners, ecosystem, and also the development of local talent. Okay, so the merger of both company will be able to provide better network quality and coverage as well, because I saw some of the comments say there is poor coverage in certain areas, regardless of DG network, both DG or Celcom. Okay, so both have the same issue. Okay, so if let's say they merge together, they combine together, they can actually use each other network. Okay, so if let's say when they combine, okay, some areas maybe DG the signal is weak. Okay, because I'm using DG as well. So the signal is weak, the network coverage is bad. Okay, but Celcom is good. Okay, because of their network around there. Okay, the coverage area. So they can actually combine together of their network and coverage to get expansion, and also they want to invest in network expansion to support growing demand for everyone use internet right now, correct? So the growing demand for data and digitalization. Okay, but so basically, how should I say? For this merger, their purpose, and then maybe even to promote, enhance 5G as well. Okay, so this is the main purpose of DG and Celcom merger. Then we can understand what they wanted to do, why they have been discussing so long. Okay, so this is it in terms of merger. How about spin-off or maybe company split? Okay, so this is another type of corporate restructuring as well. Corporate spin-off, or we can say company split. So the example here will be Sime Darby. Okay, the purpose of company split is to separate the company business based on different industry. Okay, so because this action will ease off the company structure and avoid multi-level decision making on different business segment. So basically, it is a very good example here done by Sime Darby back to year 2017. Yep. So before the spin-off, Sime Darby has all their business under Sime Darby Group. Okay, including industrial, plantation, property, logistics, so on and so on. Okay, everything under Sime Darby mother company. Okay, Sime Darby Group. But in terms of management, right? The management realized that it is actually very hard, because this is different industry. plantation and industrial is different industry. Okay, they cannot, how should I say, it's very hard for them to make decision, or maybe if let's say they want to do some operate changes, okay, because it will affect each other. Okay, so in year 2017, Sime Darby business has grown bigger and bigger, and the management decided to spin off the company based on different industry. So after the split, Sime Darby has 3 listed company now in Bursa Malaysia. Okay, you can actually check your check in Bursa Malaysia website to understand. Okay, so Sime Darby, okay, and then the other one is Sime Darby Plantation, and also Sime Darby Property. So 3 different companies operating 3 different business in different industry. So Sime Darby are focusing on industrial, logistic, okay, and Sime Darby Plantation, of course, plantation and property. Okay, so the restructuring of Sime Darby managed to separate their business into different industry. Okay, so by doing that, each of the company can operate individually. So for example, like if let's say I'm the management of, how should I say, if let's say I'm the management of Sime Darby Property, so I can only focus on property itself. Okay, I can spend my time in property industry, and then I can think of how can I make some decision in order to make Sime Darby Property more profitable in the coming years. Okay, so basically all business decision can be made directly based on different company structure. So all decision making will be straight to the point and very efficient for Sime Darby. Okay, and then okay, so the first reason, as I mentioned just now, is corporate restructuring. Okay, so the second will be certain corporate actions will be, the purpose is to impact the share prices. Okay, so as a listed company share price is one of the factors which affect investor interest and the liquidity of shares impacted. Okay, so some company prefer to keep their share price lower because it can attract more investors to invest in their company. Okay, and this company will do stock split somehow we do stock split or maybe bonus issue to make the share price lower. Okay, but for stock split and bonus issue, changes of the share price doesn't affect the clients, the investor shareholdings actually. Okay, it is just split to more outstanding shares in the market, and the shares price becomes lower, but so that it can attract more investors to invest their company because since the minimum investment cost is lower right now, okay, minimum one lot, okay, cost is lower. On the other hand, some company that prefer quality investor, they don't mind to keep their share price at a high price, okay, because they know those who have the ability to invest in their company usually are fund house or maybe high net worth investors, okay, so which willing to invest a longer period, because for those high net worth investor or maybe fund house, they don't do trading like, okay, today I buy this company and the next day I sell. Okay, they usually, because their fund size is big, okay, so if let's say they do frequent trading, the cost of trading is high as well. Okay, that's why, of course, maybe a certain part of the money will be used to do tradings, but it is very rare case. Okay, so usually they will invest and hold for long term. Okay, so as we know, these funds house and high net worth investor, they can invest in a longer period. So Warren Buffett's company is a very good example. His investment company, Berkshire Hathaway, okay, currently trading at more than 400,000 USD per share. Okay, so for US shares, even you can only buy 1 unit. Okay, you can actually buy 1 unit of Berkshire Hathaway. Okay, but you still need more than 1.6 million to buy 1 share, just only 1 share. So definitely the investor are really quality investor which have longer holding period because entry barrier is very high. So which managed to filter out a lot of short-term investor.
Vincent,
Okay.
there seems to be some background noise from your side where there are someone typing on the keyboard.
Typing on the keyboard.
Is there someone next to you?
No, because I'm alone in company.
You're alone inside the company.
Yeah, but
there,
the typing sound is very because
you can refer to the comments. I also heard it.
Oh yeah, I saw the comments also, but
yeah,
okay.
it's intermittent. You know, it appears, then it disappears.
Is it?
Yeah. Is
okay.
it come from your earphone?
Earphone.
Shake the earphone or something?
Hold on. Maybe let me arrange. I mean, do some setting on my earphone.
Looks like it's from your earphone.
Yeah.
If there's no one next to you typing anything, right?
Yeah.
Okay. Maybe you don't shake so much.
Is it better right now?
There are still a sound.
Is it better? Because I was thinking maybe
I think if you hold it, maybe it could be better.
Will be better, right? Is it better right now?
Maybe you move on first.
Okay, sure. Because I actually didn't realize this from my side. I don't hear anything.
Yeah. Yeah, I think maybe you move about like what Miles said, that your earphone often got touched.
Okay. Yeah. Maybe. Okay.
Certainly not the wind by the beach.
Yeah, hopefully not. Hopefully there's nothing besides me. Nah, just joking. Okay. Okay, since it's good, then we'll proceed. I'll be holding the mic. I'll be holding the mic. So if let's say you guys heard any sound, just let me know. Just stop me and then I will proceed. And if let's say there is some weird sound, it shouldn't be heard. Don't inform me. Don't get me. Okay, no, just joking. So I will just proceed. Okay. And okay. So this is one of the reason that corporate do certain action, okay, to impact the share price. Okay. So this is the second reason. Now give me a minute. I drink some water first. Okay. Suddenly told me that there is someone typing. Yeah, scared me off. Okay. Okay, so we have a very famous example here on corporate actions, which able to make impact on company share price. Back in September 2020, Glove stock investor are on Cloud9. Okay, because Glove's counter are spiking very fast. Some investor can even get more than 10 times return from investing in the Glove's counter. Okay, so definitely Glove's counter are hot picks during that time, and the directors of Top Glove and Supermax decided to give bonus issue to existing shareholders. Okay, so Top Glove back in 2020, Top Glove are giving 2-for-1 bonus issue, while Supermax giving 1-for-1 bonus issue. Okay, so after the ex-date of bonus issue, Top Glove and Supermax share price adjusted to 8 ringgit and 9 ringgit respectively. Okay, from investor perspective, now to minimum invest, because as we know, minimum investment is 1 lot of shares. One lot is 100 unit. Okay, in Malaysia. Okay, so minimum to invest in Top Glove and Supermax will be only 800 and 900 ringgit respectively. So therefore, it will be easier and to attract more investor to invest in their companies. Okay. And then, but actually, bonus issue or maybe share split doesn't affect the investor wealth at all. Okay, so the total value of investment doesn't change at all. But to be honest, most of the I saw a lot of investor out there, even some of my clients, which they don't really understand how this bonus issue works. Okay, whenever they saw the word bonus, okay, they thought it's an extra reward for them. So they will be happy because it's something free, you know, free shares, and then I get extra double shares because I have, for example, I have 1,000 unit right now. So maybe I have 2,000 unit. Okay, so I get free things, you know, I mean, human like things for free. Okay, so whenever they saw the word bonus, they thought it's extra reward for them, and they will be very happy even though their investment value doesn't change at all. Okay, so look at Top Glove announcement, press or maybe press release on, you can actually find on Top Glove website, okay, on their bonus issue proposal. This is the title they use on their announcement. They use the word rewards loyal shareholders. So it sounds like it creates an impression that it is something extra, something free, something bonus to the investor, which is actually, in terms of investor perspective, nothing changes. Okay, the only changes is that my share price got lower, but I get more units. That's all. Okay, but in terms of my wealth, nothing changes. But no doubt, glove counters are still the hot picks during that time. Okay, and there is some rumors say that the share price, I'm not sure whether some of you are aware or not. Back to that date, there is some rumors say that there is share price, the Top Glove share price will go to 30 ringgit. Okay, which makes people more crazy and spend all their savings to invest. So of course, we know what happened after that, but definitely today we are not discussing about how are the words used by companies' press release or maybe twisted by media. You know, sometimes media like to twist the word or maybe twist the meaning in terms of certain announcement, okay? Because they need to grab eyeballs, okay? They want to grab eyeballs, so they twisted the words, or they use a different word to twist. Somehow twist the meaning or the way to represent lah. Okay, so what I'm trying to say here is that as an investor, we need to understand what are these corporate actions and what is the purpose behind how. Mainly is how does it impact the share price of the company. Bonus issue doesn't mean that you are getting free things. Okay, your wealth doesn't change at all. So besides share split or bonus issue, there is also another way around, which is share consolidation. Okay, so this is the example here. Last year, this happens last year. During that time, PDZ share price was only few cents. Okay, which makes them an easy so-called goring stocks because the minimum investment is very low. So imagine if, let's say, the share price is, for example, like 5 cents. Okay, so the minimum investment they need is only 50 ringgit in one lot. Okay, so basically, how should I say? For PDZ, the company management want to avoid this issue and become, to avoid to become so-called penny stocks. So they decided to consolidate their shares for every 10 existing ordinary shares, combine into one shares. Okay, by doing that, the company share price will increase after the consolidation. But as I mentioned just now, investor value doesn't change at all because for share consolidation, you are getting less. Your unit is lesser. Of course, your share price is higher, but your unit that you own is lesser. So basically, is no changes in terms of value for existing investors. Okay, so last but not least, one of the reason of corporate actions is to distribute the company profit to the shareholders. Okay, so the main purpose of the company operating is to make profit. Of course, how should I say? Maybe some company have different vision. They want to create different things, but profit are the most important things. If let's say you are an investor, okay, imagine right now you are an investor. You want to start up maybe hot pot business, okay, and then this hot pot business cannot bring you profit. Okay, basically is making losses every year. Okay, do you still want to invest in this hot pot business, or maybe, for example, like bubble tea business? Okay, if let's say it's not making profit, you won't want to invest. Okay, so when the company are making profit, they can either use that money to expand their business. First of all, expand their business, or they can distribute it back to the investor. Okay, because if let's say they decided, the company management decided, I don't want to expand my business right now, it's good enough. Okay, why not I give it back to the investor, because without the investor money, I cannot operate my my company as well. Okay, so distributing profit will be one of the most preferred action from investor point of view, because now try to imagine, because if let's say you are investing in a company, and then whenever they make profit, they will share you some of the profit. Okay, are you happy with that? Definitely you are. So in terms of investor view, actually, to be honest, most of the investor will be happy to receive it if let's say the company decided to distribute all this profit. Okay, so but we have to know, sometimes when companies are distributing profit, we need to know whether it's a continuous distribution or it is just a one-off distribution. Okay, so if let's say it's just a one-off distribution, it is like a special dividend due to certain circumstances. Okay, so it can be maybe the company have one-off windfall profit. Okay, maybe for example due to COVID. Okay, glove stock have windfall profit. Okay, can they make the same amount of profit now? No, they can't. Okay, so it's a one-off. Okay, one-off event, or maybe the company has sold off their asset and received one-off income. Okay, so the case study here will be, AirAsia. So I saw someone mention it's a dividend trap. Yes, it is, because if let's say it is a one-off dividend, and for example, okay, you saw this announcement, okay, back in May 2019, okay, AirAsia mentioned that they will be distributing 90 cents per share, okay, for dividend. Okay, do remember, actually, AirAsia share price around that time is about 180, okay, it's about 180, so which means the dividend yield is nearly 50%. Can you imagine that? For example, if you are taking maybe 100,000 investing in your business, okay, and then the next year, the management told you that, okay, we will give you back 50,000. Okay, what is your point of view? Wow, I invest in this business so fast, in 1 year I can get back 50% of my money. Is it interesting? I mean, it's very attractive. Okay, so 50% dividend is actually a huge distribution back to the shareholders. And I have a few clients as well, and some of my friends, they don't know. I mean, it's actually a special dividend, okay, just one-off. But a lot of people are crazy about it because they are interested to get such high dividend. You imagine you invest in something, 2 years time you can get back all your monies. Okay, so but back in 2019, okay, the reason behind AirAsia distributing such high dividend is because they sold all their airplanes and leased back for operation purpose. So at first they own these airplanes. Now they sell out everything. Okay, they sell out everything, and then they decided to lease it back. Okay, and definitely by selling their airplanes, they receive a lot of money. Okay, but they have no other ways to use it because this money, they have no other proposal or maybe no other ideas. What can they do for this money? So why not they distribute it back to the investor? Okay, but it's just one-off distribution. It won't prolong. So basically, okay, and after the, how should I say? After the dividend as well, the share price will be adjusted. Okay, so basically, this is how should I say? If let's say it's one-off, okay, definitely depends. It can be a good thing as well, because since the company have no other ways to use, then why not give it back to investors? Okay, but you need to see, is it one-off or prolonged? Okay, so one-off, don't get too hype on it. Okay, so when we study about how frequent a company issue dividend, we need to study the company dividend policy. Okay, this is one of the corporation as well. If let's say a company have, constantly distribute dividend, they have a dividend policy. So we take Maybank as an example. They did mention that the management decided to pay out at least 40%. Look at the highlight here. Okay, at least 40 to 60% of their net profit as dividend to their investors. Okay, so but we look at past 10 years. Okay, Maybank have more than 70% dividend payout ratio, which means more than 70% of their profit will be distributed out to their investors. Okay, so this is an example of consistent and continuous dividend that has been paid out to the investor. So of course, when we back to what we can do as a shareholder, okay, or maybe as an investor, okay, if let's say a company is giving dividend, first of all, you need to understand, is it a one-off one, or is a prolonged, which this company already have dividend policy that they tell you how much profit they make, they will distribute back to you. Okay, so if let's say the dividend policy is you think is good enough, nice enough, okay, then definitely you can invest in it. So this is what we need to know in terms of those dividend payout. Okay, okay, so okay, we have come to we actually complete two parts. First of all, what are corporate actions? Okay, now we know what are corporate actions, and then we know what is the purpose of corporate actions. Okay, so just to do a quick summary, revise on what we mentioned just now. Okay, in the past 40 minutes. So basically, what is the purpose of corporate restructuring? I mean, they want corporate actions. Somehow, maybe they want to do corporate restructuring to ease off their management decision. In terms of management level, they can have a better planning, okay, not so complicated multi-level to go through, okay, to ease off their corporate structure, okay. And secondly, will be impacting the share price. It can be positively or negatively affected by towards the stakeholders. Okay, and last but not least is to distribute the profit back to the shareholders. Okay, so now we have come to the next part of we will be talking about what are the types of corporate actions and how does it impact us, okay, or us, or maybe the companies, so the stakeholders lah. Okay, so before I proceed, just to have a quick check, is everyone still able to follow what we talked about just now? Am I going too fast, or is it still okay to everyone for follow? Just a quick check. Okay, I saw a lot of people say okay. Ken say yes. Yep. Madeline, okay. Okay. Pauline, okay. Okay, great. Okay, so I hope it really helped you all to have better understanding on different corporate actions. Okay, so we will proceed. And okay, for different types, we have different types of corporate actions here. Okay, so we will be talking about what are the impacts of these corporate actions towards the companies and towards the shareholders. Okay, so for corporate actions, we can classify it into three types. Some are voluntary actions, which investor can choose to opt in to this action or not. Okay, so if let's say they don't want, just leave it. Okay, so the examples are right issues, share buyback, private placement, and also ESOS. Okay, so some are mandatory. As long as major shareholders agrees to proceed, okay, then this action will be taken. Okay, for example, like stock split and then a bonus issue, M&A. Okay, so for example, like DG and we take back the previous example, DG and Celcom M&A. Okay, do you think that 100% of DG and Axiata or maybe Celcom shareholders agrees this M&A? I can tell you, not everyone agrees. Okay, definitely not 100%. But as long as major shareholders agrees, okay, most of the people agree, this will proceed. So if let's say you are holding Digi or Celcom shares, does it affect you? Yes, it is. Okay, even though you don't agree to proceed, okay, but you have no choice. So this is mandatory unless you sell unless you sell your shares, you don't want to hold it anymore. Okay, so last but not least is mandatory with choice. Okay, for example, is I mentioned just now dividend payout. Okay, so although dividend payout is mandatory because as long as the management say that, oh, okay, we'll be distributing how many percent of our profit as dividend. Okay, can you say no? Unless you are major shareholder. Okay, unless you are major shareholder, and if not, if let's say even though you say no, it will still proceed. So it is mandatory, but you actually have a choice. So if let's say you want to receive the dividend, you can sell your shares before the exit. So as long as before the exit you sell your shares, that you won't be receiving the dividend. So therefore, it is mandatory with choice. Okay. So okay. So the first thing moving on in the coming part, we will be talking one by one, but of course, we won't be go into very details in each corporate actions because if let's say we each of the corporate actions we talk about, for example, like 10 minutes, 15 minutes, I think Shane will screw me up because we don't have so much time. But I will just briefly explain what is this action and how does it impact towards stakeholders. Okay, so first of all is right issue. Right issue means that the companies offers more shares to existing shareholders. Okay, so for example, I'm one of the shareholders for a company. Okay, the current share price is actually 80 cents. Okay, but the company now offer me more shares with, for example, 60 cents per shares. Okay, so to see whether I want to buy or not. So what is the purpose they issue this right issue is that mainly they want to raise more fund. Okay, they want to raise more fund because maybe they have different projects, or maybe some of the company raise funds to pay off their debts or something like that. Okay, so how should I say? The right issue purpose is to raise more fund to certain purpose. Okay, of course, the company will tell what is the purpose of this. Right issue. If let's say the fund has been raised, what are they planning to do? Okay, but what will it impact in terms of the stakeholders? Okay, so share price usually will be decreased. Okay, because in another way of thinking, you can say that the company are asking money from you. Okay, so now they don't have enough money, regardless of what project they want to do, they don't have enough money, so they are asking money. Hey, Ali, you have any other money? I don't have money a deal. I have no money to pay debts, or maybe I have a new project here. I don't have money to bid for this project. So can you give me more money? Okay. So if you agree to do so, okay, because it's voluntary, you actually have a choice to say no. Okay. If you agree to do so, then you are using lower price to buy the shares, but definitely the share price usually will be decreased, and your shareholding percentage will get diluted as well. Because imagine if you don't exercise this, okay, for example, you are owning 1% of the company shares, okay, you don't exercise this choice, these actions, okay, but other shareholders do, they own more shares right now. So will your shareholdings get diluted? Yes, it is. Okay, your shareholders will get diluted. So now maybe you only own doesn't reach 1%, maybe you only own 0.8% of the shares. Okay, so of course, the other negative is that it is limitation of fundraising, because the maximum they have how should I say, they have a ceiling to for their fundraise, but not everyone willing to do so. Okay, so if let's say the reason they raise the fund or do the right issue is not favorable to the the investor, if let's say a lot of share investor decided not to execute this this right issue, okay, they cannot raise so much money compared to IPO. Okay, and last but not least, it will be negatively affect the company public image, because as I mentioned just now, so the company say that Keong, I don't have enough money. Can you give me more money? Okay, to do some certain project. So the public image of the company will be affected. Okay, so this is the impact of right issue. Okay, and share buyback. Okay, so share buyback is that company gives an offer to buy back shares from the existing shareholder, okay, at an attractive rate. So usually when company do share buybacks, there are a few reasons. It can be the company think that okay, my shares is actually undervalued right now. Okay, so I want to buy more shares. I want to hold more shares because it's undervalued. Okay, it shouldn't be trading at so low. So I just want to buy more. Okay, to hold. Okay, or maybe the company don't want to have too much of so-called the public investor right there. So they want to own more shares on themselves. So they can actually do share buyback. So depends on what is the purpose of the company, that management direction. Okay, so the impact here I put, of course, you see some are negative, but it can be positive and negative. Okay, so it depends on how market reads the action. Okay, it can be as I mentioned just now, it can be undervalued. Company think that it's undervalued. Okay, so they do share buyback, or it can be poor prediction on the company management decision. Okay, and then it also will less of, the dividends they're able to distribute to the shareholders will be less as well. Because imagine you have only your company have only 100 million of cash. Okay, so if let's say they can either use this money to expand their business, or maybe they can distribute to the profit to the investor. Okay, as I mentioned just now. So if let's say they use the money to do share buyback, okay, they use 50 million to do share buyback, so they only left 50 million cash on their hands. Definitely the money available to distribute back to investor are getting lesser. Okay, so it can be poor use of capital as well. You have 100 million right now, and then how should I say? You have 100 million right now, so it depends on how the management decided to use this money. So if let's say they decided to use this money to do share buyback, then need some time to see whether the decision is correct or wrong. Okay, so if let's say it's overvalued but still keep on doing share buyback, then definitely it will be poor use of capital. Okay. Next is private placement. Okay. I saw one of the comments mentioned asking what is private placement. So private placement is a sale of stock shares or bond to pre-selected investors. Okay. I'll make it simple. I'll draw a picture for it. For example, now I'm owning 20% of Bluebell Bursa shares. Just an example. Just imagine if let's say Bluebell Bursa is a listed company. I'm owning 20% of Bluebell Bursa shares. Okay. And then I want to cash out. I want to get some money. Okay. Turn my shares, convert my shares into cash. So what should I do? I should sell. I need to sell my shares, correct? Okay, I have a few choices. Okay, I can actually sell in the open market. But what happens if I sell in the open market? Okay, people will ask, hey, Vincent are selling shares right now. Okay, the director, the shareholders are sharing shares, for example. Okay, the shareholders are selling the shares right now. Is it any bad news or something like that? So it might cause butterfly effect. Okay, maybe for my purpose, I just want to get some cash for other business purpose or something like that. Okay, maybe I own another company which sell Lok. Okay, Lok. I want to invest in Lok business, for example. I need to cash out, but market reads wrongly on my my purpose. Okay, so private placement is that I find someone who willing to buy my shares. Okay, they know what my company is doing. Okay, but we make a deal. Okay, not in the public market but under table. But of course, the under table is legal one. Okay, so for example, I find Shane. Okay, Shane interested to take over my shares. Okay, we are not dealing in a public market because it might cause fear. Okay, so we are dealing underground. We just inform Bursa. Okay, Bursa, I have a deal with Shane right now, which I wanted to sell 10% of my share to Shane. Okay, at this price, fixed price. Okay, so but of course the limitation is that it will be limits of number potential investors, and then it is difficult to find suitable investors because if let's say Shane are not interested, then I need to find another investor as well. Okay, so this is private placement to deal an agreement with investors internally rather than an open market. Okay.
I think that is more towards direct business transaction. Private placements involve issuance of new shares, right? Not
yeah, correct. So it can be both. Yeah, it can be both as well. So private placement, it can be new shares as well, new shares, and then now, but I don't want to offer these shares to the market. So only certain investors are interested. So it can be this kind of way as well. Okay, and okay. So ESOS, if let's say, if let's say some of you are working in, how should I say, in a listed company, definitely you have a chance to get this. So basically, ESOS is an incentive scheme to reward employees. So basically, you have an offer from your company. You have an option to whether to purchase the shares of the company at a certain price. For example, my mother company, the share price is about 180 right now, for example. Okay, so in terms of ESOS, which means that the company offered you to buy the shares, okay, the company shares, okay, on 150, okay, the price 150. So you have your choice to decide that you want to buy or not. Okay, so if let's say you buy, it's actually a reward scheme basically. Okay, so the purpose mainly is to reward their existing employees. Okay, so if you buy and then you own more shares of the company, so is it a good thing or bad thing? So it can be both. Okay, because if let's say you buy more and more, you are making profit. Imagine market price is 180 and you are buying with 150. Okay, you are making profit. So if let's say you own more shares, okay, your loyalty towards the company will more. For example, like you own these company shares, okay, and then because you are inside, you are employees, okay, you are inside, this company is going in a good direction, okay, so you will hold tight on their shares, you won't sell, okay, and also you will put more effort on your work as well, because if let's say the company is making profit, you will get benefit as well. So it actually is some kind of loyalty reward scheme, okay, for existing employees. So, but of course, it can be sell off as well, because actually some might be holding, but not all employees. Okay, not all employees will hold tight the shares received. So some will be treated as a bonus. Okay, because previously I was working in a listed company as well. So a lot of my colleagues once receive the ESOS, they will sell immediately, because they told me, Vincent, bonus mah, ambil je. They will treat it as a bonus. It's not a wrong thing as well, because it's your decision. You can sell or hold, nothing wrong. Okay, but if let's say most of our employees are not holding tight with the shares, then after the ESOS, they receive the ESOS, they will sell off in the market. So it will cause some certain level of price drop. Okay, so this is for ESOS. So this is for voluntary part. You have the choice. Just now, as I mentioned, private issue, right issue, private placement, ESOS, etc. You have the choice to execute it or not. Okay, if you want, just go ahead. If you don't want, that's all. Okay, you have the choice. So how about mandatory? Okay, mandatory is that as I mentioned just now, you don't have the choice. Okay, you don't have a choice. So basically, it can be stock split and reverse stock split. Actually, this one I already mentioned in the previous slide, so I won't go through too much. So basically, the company divides the existing shares into multiple shares, okay, and reducing the face value of shares. So if let's say stock split, it will reduce the reduce the share price, but your share unit increase. Okay. Reverse stock split is another way around. Okay, so depends on what the company want to do. If they wanted to have a greater liquidation, okay, or maybe increase in terms of get more people involved in their company investment. Okay, so it depends on what they want. So okay, next will be bonus issue. Okay, so I think bonus issue I already mentioned just now as well. So bonus issue is when a company issues additional shares, okay, to its shareholders, and you don't need to, from investor point of view, it's no cost because I don't need to buy the shares. Okay, right issue is different. I need to get some money to buy the shares, but bonus issue, no, it's directly counted to you. Okay, you don't need to do anything. You just need to wait after the exit, and then you will get the shares. That's all. Okay, so but as I mentioned just now, shareholders' wealth remains unaffected because basically the value is, how should I say, no changes at all. Okay, no changes at all. It's just that the liquidation is higher. Okay, so this is for bonus issue. But of course, bonus issue, it incurred costs. It incurred costs, but not to us, but is in terms of administrator, because they need to do something. Okay, in terms of company operation, they need to do certain actions or something like that. So it is a cost as well because their time can be used in other ways, but this is company decision. So in terms of bonus issue. Okay, so next. Okay, M&A, mergers and acquisition. So I think I explained this as well just now. So when two companies merge together to form a new company, a new direction, or maybe a buyout, it can be merger or a buyout. Okay, so the company have a new direction right now. So what is the main purpose? Usually it will be cost efficient. Okay, in order to, utilize the resources better and give, a better direction towards the company, in the future. Okay, so maybe I can use the other company resources, okay, or maybe their networks or even their client base. Okay, even their client base. So it can be more competitive in terms of how can you react and compete towards your competitors because you have more resources right now. Okay, so this is merger and acquisition, and basically as a minor shareholder, we don't have a choice to say, of course we can say no. Okay, but if let's say majority say okay to proceed, then you have to follow as well. Okay, so okay, so last but not least, I do mention already as well for the dividend payout. So this is the mandatory with choice. So part of the company's profit will be given out to shareholders, and then how should I say, you can take it as a profit sharing. So basically, okay, I earn money, I share back to you. That's all. Simple as that. But of course, what is the impact of it is it will reduce the shareholders' equity. Why do I say so? Because it's very simple. Imagine if let's say you own 1% of the company shares, okay? And this company have a net cash of 100 million, just an example, okay? So I don't, exclude all those, machines, all those inventories stuff, okay? By net cash, you have 1 million. Your investment actually worth 1 million. Your 1% shares actually worth 1 million because the company have 1 million, 100 million of cash. You own 1%. Okay. But if let's say they already distribute out, for example, like 10% to you. Okay. So the company cash left only 90 million. So your 1% will be reduced as well. So your stockholders' equity will be reduced, and then it will dilute your earnings because whenever the cash has been paid out, okay, which means the company has lesser cash in terms of this relates to the company's growth as well. Because imagine I don't have so much cash right now, so I need to how should I say? If let's say I want to expand my business, okay, I don't have too much money to expand my business because already distributed out. So what can I do? I can only operate my company with limited cash. Okay, so it limits company's growth as well. So this is why usually those growth stock, okay, for example, usually a lot of people will think that, will classify tech stock as growth stock. Okay, so usually growth stock, if you look at tech stock, right, they seldom distribute, their dividend yield is actually very low because they need to reserve the money to expand their business, okay, to make more profit and then expand their business, expand their their network base coverage or something like that. Okay, the in terms of their market, to capture more markets. Okay, and then but if you look at those blue chip stocks, for example, like Maybank, okay, the example I showed just now, why is Maybank distributing 70% of their net profit give back to the investor? Okay, what is the reason? Because Maybank currently hold on, let me do a quick check first. Maybank current market cap as of today, okay, Maybank, the share price closed at 865. Okay, as of today, the market cap is 100,000 million. Okay, so it's actually by Maybank is actually billions already. You cannot use millions to say Maybank's market cap. Okay, so can you imagine Maybank? If let's say Maybank share price go double, okay, go to $70. Okay, what does it mean? It means that the market cap have to grow double? Because by right okay, by right it have to go double. Okay, so can you imagine the nearby Maybank, nearby your house, the Maybank nearby your house, okay, on the front of the street have one Maybank, at the end of the street have another Maybank, two branches doing the same thing, but maybe it's just 30 seconds walks, for example. So it is actually for now very hard for Maybank to grow double anymore because the size is already very big. If let's say, maybe I make another example. If let's say you are making 2,000 a month, okay, can you double up your income in a month? 4,000? It can be done so. Okay, so it's easier. But imagine you are earning 1 million a month. Can you make 2 million a month right now? Can also, but is it harder? Yes, it is. So usually for those blue chip stock, already matured company, they will distribute most of their net profit back to the investors. Okay, just like Maybank, 70%, 70 or even 80%, because they don't have too much, they don't need to expand too much. There is already a ceiling there. Okay, so basically, they don't have a better purpose. Why not they just, distribute it back to the investor, take it as a reward for investor. Okay, you invest in my company, so I make profit. I send back. I give back to you. I share back the profit to you. So this is how dividend payout works. And of course, as I mentioned just now, is your choice. Okay, if let's say you tak suka Maybank punya dividend, just leave it. You can actually sell it off. Okay, you can actually sell it off before the exit. I don't want to receive Maybank dividend anymore. Okay, you can actually sell it off. So you have the choice right now. Even though you are not owning Maybank shares right now. Okay, but once the announcement, you think that, hey, I want to join this business, I want to take some profit. As long as before the exit, you buy the shares, you will be receiving it. But of course, after exit, the share price will be adjusted lah. So there is no immediate, you can't do arbitrage on that, just to let you know, because I have a lot of friends thought that, oh, there is an arbitrage opportunity. As long as I buy before exit and sell at the exit, I earn the interest. No such thing. Okay, so this is my sharing for today. Okay, mainly today my purpose is to explain different types of corporate actions. Okay, and then to let everyone understand more on it, and also what is the impact towards this corporate actions. So we as an investor, we need to know, okay, whenever the company have such planning, such action, what is the impact? And then we will know how to react on it to understand more about it. So today, this is my main sharing for today. So hope everyone able to get something, learn something. And yep, I'll pass back to Shane. Thank you so much.
Thank you so much, Vincent, for sharing with us the secrets behind corporate actions. All right. So if you have any question to ask our speaker today, Vincent, please write them in the Q&A box, yeah, not the chat box. I think today our chat box and Q&A box are, equally active. Okay, I think just now you talk about arbitrage, right?
Yep.
I actually observed and noticed that on a few occasions that, if the dividend, let's say, is 10 cents per share, so after the X date, right, it maybe got reduced by about 8 cents or 9 cents per share. It didn't really reduce 10 cents per share. So just want to raise it for discussion. What do you think?
Okay, I can tell you that definitely, in terms of the company, how should I say, the company adjustment, definitely it will reduce 10 cents. Okay, because for example, the example I mentioned just now, if you have 100 million on your hand, I distribute out 50 million. So I won't be able to have extra, after distributing all the profit, I won't be have 55 million. Definitely, I will be only have 50 million. So the price is adjusted as the same as well. 10 cents, it will be definitely adjusted 10 cents. But maybe when you see it's actually 8 cents, it is because there is some investor willing to buy at a higher price, which means that they straight away make orders to buy at an early market. So the share price will increase 2 cents, depends on the market demands lah. So it will increase based on the latest demands. But in terms of accounting basis, that will the adjustment definitely will same as the amount of the dividend payout. Yep.
All right. Thank you so much, Vincent. Michelle would like to ask, among all the corporate actions, which is the one that we need to pay particular attention to or to avoid?
Okay. So if let's say, okay, to be frank, for example, like bonus issue, actually it doesn't change too much. So bonus issue should be fine. Okay, and we talk about Malaysia investment habits. Okay, so I still see most of a Malaysian likes bonus issue. So, but that one, it doesn't impact too much. So you don't need to take too much. Maybe the one that you need to take pay more attention is right issue. Okay, you need, even though you choose to not to exercise the right issue, don't think that it is not affecting you. Okay, because you need to understand what is the reason the company raised the money. Okay, if let's say they are investing in a new business, whether the new business is good towards the company or not, okay, or favorable towards the company or not, or maybe they are buying a new, for example, a new factory, for example, or maybe if let's say they are repairing their debts, then it will be a bad thing. Because imagine someone asks you for money to pay their debts. Is it a good thing? No, definitely not. So right issue is one of them. And then dividend, okay? Because to be honest, other actions like M&A, private placement, unless you are high net worth investor, for normal investor, there is rarely we will be involved in this kind of action, but those are common one like bonus issue, right issue, and dividend payout. So dividend payout, you need to see whether it's a dividend trap or not. Okay, so if give you a high dividend, okay, it looks attractive, looks interesting, but whether can it sustain or not. So if it's not sustainable, then it's pointless. I mean, not to say pointless, but don't get too hype on it. Yep.
So do you like companies which regularly do private placement?
For me, not really. For me, not. I don't really like it because, how should I say, private placement, which means that one of the things is that these companies, it's actually a bit similar like right issue. They constantly needs money. Okay, which means, in other words, okay, which means they might not be able to maybe they don't have the capability to manage on what they have right now. So they need to ask from new investors. Okay, so they are for me, I don't really like company, regardless of private placement or right issue. I don't really like company that keep asking me for money. Common sense, I mean, like I don't like people ask me for money. Yeah. So but it depends. If let's say once in a blue moon, yes, it's okay. I need to know the purpose. But if let's say it's very often, for me personally, I don't really like it.
Okay. If I may add one corporate action to the list of things that I pay particular attention to, that would be share consolidation.
Okay.
I will explain why. Because most retail investors are not very familiar with share consolidation. Because all of us here get the euphoria, okay, when company announce bonus issue, suddenly we got, like free shares, right? And a lot of investors are very happy. So actually nothing else changed, right? But for share consolidation, essentially nothing else changes. The reason companies undertake, share consolidation is to avoid being seen as penny stock, so that they increase the share price, and they probably shrink their share pool by 10 times. Okay, because the share price raised 10 times, the price, the quantity of shares, okay, you also shrink by 10 times. But a lot of investors, right, because of Bursa settlement, like because let's say the stock yesterday was 10 cents, today it become 1 ringgit because of share consolidation. So it become 10 times. But then the quantity in your book actually did not reduce by 10 times yet, because of Bursa settlement T+2. So a lot of investors would have mistaken, yesterday I have 1,000 shares. Today I also have 1,000 shares. But the share price 10 times already. So what investor did was, the mistake that investor did was they take profit. They sell off all your 1,000 shares at 10 ringgit. Actually, they oversold already. Because by right, the quantity should have reduced by 10 times.
Right.
But they oversold. They sell all the quantities because of T+2, the quantity hasn't been reflected in their stock trading account. So if you oversold, you have to cover back your positions. So after that, you'll go through a lot of trouble. Okay.
Yeah. I think Shane raised a very good example because to be honest, I think a lot of investors are not so familiar with share consolidation because yes, it happens, but compared to bonus issue, compared to dividend, it doesn't happen so frequent. Okay, so yes, it will actually occurs the problems that Shane mentioned just now. You actually oversold your shares. Okay, because you need to know one thing. Okay, as an investor, we need to know one thing is that we are actually investing. We are not buying lottery. So if let's say you saw your your company share price increase to 10 times, you don't think that, there is a lottery there, okay? Because even though, Bursa have rules that every day the limit up is only 30 cents or 30%, okay? So depends on which type of stock. So if let's say this happens, the first thing you need to know is to check, we need to do is to check, what is this happens? Don't take it as profit from the sky, yay. Yeah. So to avoid this, you need to check the announcement and then, there is share consolidation. So basically, it's actually nothing changes. So when we know about this, okay, understand about this, we will be avoiding this issue because if let's say you oversold, you have to cover your position. So in the sense that if let's say the share price drop, basically you are making losses.
Yep. Yeah. If a lot of people oversold, then a lot of people will have to, cover back the position, which cause the, share price to go up.
Very strong.
Yeah.
Like it can be up and it can be up and down in a very short time. So it's not good for a long-term investor.
All right. The next question is by YH. Could you explain the term related party transactions and the implications to investors? They seem to appear in most financial reports.
Hold on. Sorry, can you repeat the question again?
Could you explain about related party transactions?
Okay.
And the implication to the investors?
Okay. So okay, can I make it the question like this way is that whenever a company make announcement in Bursa, okay, whether certain actions they want to do, what is the meaning of so-called related party transaction in the announcement? And then how should I say, what is the related? What is the meaning? And then who does it means of related party transaction? Am I correct? Do I understand the question correctly?
Yeah.
Okay. So related party transaction, because they have a lot of how should I say, okay, certain corporate actions will involve certain parties. So if let's say like direct business transaction, okay, they cannot mention all the parties in the announcement. It will be a very long list. So for direct business transaction, okay, DBT, then if the related party transaction, it will only in person involved. Okay, so very straightforward. You need to understand what is DBT. Okay, so if let's say DBT is a deal between, for example, between me and Shane. Okay, so if let's say you are not Shane, okay, and your name is Crystal, for example, okay, so it's nothing related to you. Okay, of course, it might affect indirectly, but directly, no, it's nothing related to you. So the so-called related party transaction is just me and Shane. That's all. But if let's say for dividend, okay, as long as you are holding the shares, you are the involved party as well.
All right. Thank you so much, Vincent.
Okay.
For next question is for corporate action events that may result in fractional entitlements. So will we receive fractional shares?
Okay. You mean like, for example, those, for example, like how many units of shares you own, and then it will give you how many units of bonus issue or something like that?
Yeah, that may result in fractional entitlements. Let's say entitled to 12.5 units of free shares.
Okay.
Will I receive 12.5 units, or I receive 12, or receive 13?
Okay. So basically, you sometimes it happens, but definitely there will be no how should I say there won't be 0.5 units of shares, no such thing. Okay, but you can have odd lots. Okay, so called odd lot is that because we know when we sell shares, buy or sell, the minimum we have is the minimum transaction we can do is 100 units. Okay, so they won't be 0.5 units of share. Okay, they will be either round up or round down, depends on the units holdings. Okay, but if let's say you have odd lots, okay, then you will be not able to sell the odd lots. Okay, I mean as a whole, you cannot sell if let's say you want to sell the odd lots. Okay, you need to go to the odd board there. Okay, to sell the odd lots. So the pricing of odd lots can be way different compared to the actual market price. So in order to avoid this situation, because you can actually count before when the announcement release, okay, you have time to react. I mean like before the exit lah. So if let's say you don't like this situation, you want to have odd lot, it's either you buy more to make sure after the corporate action you still have the full lot, okay, or you sell your shares. Okay, and then but if not, if it really happens, then the odd lot the only thing you can do is to sell at odd market. That's all. But the price will be very different.
All right, so that shall conclude our question and answer session. So time is running out. So thank you so much, Vincent, for sharing with us the secrets behind corporate actions. So let me share my screen.